Hey everyone, we've got an exciting video today because something we spoke about 2 months ago has just come into play. Take a look at all the assets and how they've moved. Over the last 7 days, Bitcoin and Ethereum have dropped respectively about 2 and 2.5%. Meanwhile, if we take a look at BNB, Cardano, Solana, Polygon, we can see double-digit falls in the value of these assets, and these are altcoins, higher beta assets, lower market cap than Bitcoin and Ethereum, and much more volatile in all market conditions. However, the way they're volatile in these specific market conditions, it can be very difficult to trade. And I'll explain it in a post I did a few months ago. Now, the article was titled How to Trade Altcoins as a Complete Beginner, and I focused on explaining to you guys how altcoins will build insane wealth for some and destroy wealth for most, regardless of how huge the opportunities are. And this was specifically happening during meme coin season when Pepe and other altcoins were going crazy, but it wasn't just isolated to those. It also includes anything that really isn't Bitcoin and Ethereum can be very dangerous to trade when we're not in parabolic bull market conditions. Because in a parabolic bull market, the cycle is clean and predictable. We go from Bitcoin to Ethereum to altcoins to trash coins, and then we just repeat that cycle. However, we're not in a full-blown bull market. This is much more like 2019, and I've been in these conditions before, so I know what to expect. Coins will lag, you'll get isolated narrative pumps, and you'll get sharp crashes and unpredictable ends to the cycle. And you'll get absolutely wrecked trading this like a full-blown bull market. What everyone needs is to get a good system together first. That means clear strategies, solid risk management at the very least. Now, the rest of this article, I just share a strategy you can use to trade altcoins in these conditions. If you're interested, I'll leave a link to that in the description below. You can go check it out on my Telegram. But for this video, I want to focus on the current markets. A particular type of trader that gets hit really hard here is in a bull market, you can construct yourself a positional portfolio. And by this, I mean you pick, if you take a look, like say Bitcoin, Ethereum, BNB, Cardano, and Solana. So you just pick these coins, you assign a percentage allocation to each, and then you hold all of them. However, that does fine in a bull market because while one of them does bad, the other does great, and one of them outperforms and makes up for all your losses. But in a bear market, you don't have that luxury. You can't be that sloppy. You don't get away with it. And then you end up taking huge hits like 15.89%. And sure, BNB had some bad news about it, but Cardano got hit just as hard. Solana, nearly as hard. Matic, nearly as hard. So don't go blaming, oh, this one piece of bad news happened. It's all the SEC's fault. I lost money. It's not the SEC's fault you lost money. It's your fault, always. And when I lose money, it's my fault, always. Not some influencer who told me to do something, not something I heard on a podcast. Okay, so we'll start with the weekly. We're just floating below our short-term moving average, and it acts as a slight resistance here, and we seem to be heading down towards this moving average here, which is confluent with the 24 to 25k resistance, because this will likely continue moving as we go sideways there, and then we could see us come down and test this level over here. Now, as far as market conditions are concerned on the higher timeframes, we are in a trending environment. It is still the case that I'm going to favor longs over shorts because the price is clearly headed in one direction. And right now, until we break this one key structural level, and that's 25k over here, we do maintain that structure. And there's a strong argument for us just continuing up as we are now. So if we bounce here, that will continue this structure, come down, test the 100, continue up. That's very normal price action. That would just be a healthy continuation of this uptrend. However, it's rarely that clean in a bear market. If we go back to, say, 2018, 2019, there were several attempts where there were slight market structure breaks. We tried to get up, breaks, tried to get up, and it kept failing multiple times until we just went sideways for ages, had a sharp crash. And then even when the tide shifted and we started going up, see, we had a huge move here from 3,200 up to 14,000, then a extended downtrend for several months, and then stuff did reverse, but it was ups and downs, and it wasn't just one clean straight line move. It took several months to unfold and really build. So just expect more of a roller coaster than a straight line up. So 25k level, and you guys know I'm a big fan of this 30k level simply because I really like psychological levels, and the 30k level also is important for my trading because here this is going to be where I can start looking for trades myself for my system. You could definitely argue that you want to go up here to about 31k where the previous high was, but I know that this is sufficient data here with about 3 tests. If we bring it slightly down there, 3 tests and then a slight deviation above the level. So look, we've got 3 tests of resistance here, giving me a strong level, and this almost acts like a deviation from the level, and then I can look for an entry, high risk over here, and then double down there. So it's almost like a 2-part entry. I start building my breakout trade here, and then I look for my stronger entry over there. That's unique to my system, and these are rules I've developed over a long period of time. So that's the breakout I'm looking for, and then the breakdown is actually a little bit tricky here, because if we break down over here, we're now breaking down into ranging conditions, and momentum trades just don't do that well in macro ranging conditions. What do I mean by that? Right now, the weekly structure shows us an uptrend. Trending environments are great for momentum traders. However, if we lose this uptrend, this becomes a mean reversion environment. That means our trading systems need to generally bet that the price is going to stay under this resistance of 30k and then above this support of 16k. So if you look, this actually creates a nice level-to-level system for us to trade off of between 30k, 25k, 20k, and 16k. So most of our trading will happen between these levels, and we can definitely go on the lower time frames and solidify these levels into the ones we want to trade. This becomes our ranging environment to trade, and in a ranging environment, you can't just bet this is going to break down to this is going to break down to this, because one, the moves aren't clean. They tend to be a little choppier. They don't quite go down like you want them to. Second, probabilities shift. You need stricter entry conditions for momentum trades where you're trying to trade from this level to this level. But a general rule I like to use is when you're in a ranging environment like this, you can take Fibonacci levels and then you mark your midpoint, which is about 0.5. And then above here, you bet on the price going up to this level until it reaches this extremity. Then you bet on it coming down to this level. Then if it breaks here, you bet on the price going towards the bottom range, the support here. Then if it hits that support, you bet on the price going back up to the 0.5. So the 0.5 becomes like this flexible support and resistance. Above this level, it's a really strong support and magnet. Below this level, it's a really strong resistance. And if you want to take it a little bit further, you drop another 0.5 level here, where generally this can be a breakdown level, and I wouldn't use, for example, the 0.5 level there. I'd adjust and use this key support over here and this key support over there. You can be flexible with this. If you find a high confluence point in the middle that isn't exactly 0.5, then that's more likely to be your key point to play around, that where demand and supply starts to shift. But yeah, you guys really liked when I previously shared a little bit more about these strategies and how to trade them, so I thought I'd do that now again. So let's move over to the 1 day. Take a look here where the data gets a little clearer, and here we've got the 25k level, which I've spoken about as being really important. Again, I do like the round psychological number, and because we're in an uptrend, I'm taking the upper bound. There's a very good argument for 24.5 over here, strong data point there, and over there, and then we've got this slight pause in price action over here where price bounced up, hit a resistance, came back down. This acted as a support, so we can use 24.5k. And we can also use 24k. I don't like it as much as 24.5, but again, it fits in with a lot of data, and you can isolate the rest of it as deviation. The reason I like to use the upper bound, which is 25k, is simply because of our 1 week structure. So you take a look at the 1 week structure, and we have got this uptrend since really the beginning of the year. And that makes me want to be a bit more aggressive with my supports and a little less aggressive with my resistances, which is why my resistance is on the lower end of the 30 to 32k range, and it's on the higher end of the 24 to 25k range. Again, these rules that have served me well and ones I've developed over a long period of time. You don't have to copy my rules. In fact, you should not copy my rules. What I'm trying to do is explain my thought processes so you guys can develop your own. Find what works for you. Find what arguments you can consistently form and use to trade the markets. So next I'm going to go down into the 4-hour time frame. And this is, again, an example of, like, on the lower time frames right now, these are clear ranging market conditions. This is a sideways volatile market. And if you take a look, previously, we were looking at these 2 levels right before we saw this breakdown. And go over exactly how this could have been played quite nicely. On Monday, I was looking at these two levels here, and there was definitely a potential for a breakdown or break up play between these two. Again, I don't love trading these conditions because I've identified it pretty solidly as sideways volatile, and this is why. Because look, you could have gone for a breakdown play here. If this was momentum conditions, this is where you go for a breakdown. You could have entered anywhere in on this candle, and what you'd have been betting on is that potentially this resistance here is going to break and price is going to continue downwards to, say, 25k. Now, this was so volatile that you definitely could have played this to this. But see, what happens is you get continuation here. Oh, look, price is looking good. We've broken the other resistance, probably going to go down to our next level. And then you get a little bit of sideways action, almost continuation, and then pretty much a huge reversal straight back up. This is prime mean reversion conditions. In fact, this is the very definition of mean reversion. Here is the 100 moving average on the 4-hour time frame. And price goes down away from the average and then immediately slingshots back to the average. These are mean reversion conditions. This is what consistently happens, and this is what you need to build your trading systems around for these conditions. So going forward, still like this resistance over here, about 27.2k. Above this, we can potentially start playing towards the 30k level over here, but several resistances we'll want to watch out for on our way up. Two levels where I do expect to see some momentum build, especially on the lower time frames, will be 30k and 25k, so I'll be paying attention to those two key breaks. As for the weekend and the foreseeable future, we remain in sideways volatile market conditions. Be careful on altcoins. If you're a momentum trader, start developing different trading systems, backtest your old systems, wait patiently. If you're a mean reversion trader, have fun and enjoy your profits and ideal market conditions.